on learnings, I suppose, there. As a summary, so corporate finance help, my view of corporate finance help was that it was on balance positive. So I was glad that we did it. They didn't introduce us to the investors themselves, but they might have done, and they probably would have done in a different situation. There's always luck in these things. But equally, they helped a lot with managing the process and managing the meetings and getting presentation packs done and all the sort of stuff that we would have to spend our time doing rather than running the business itself.
Did you pay them the same fee even though you introduced the numbers?
We did in the end. We could have negotiated on that, but we raised less money than anyone was expecting as well, and so their fee didn't look. The reality is, it's kind of, they did the job that they said that they were going to do. We did our side of the bargain. I didn't think that would be right to go back and say, but we introduced them. They helped us to get that, to put that deal together. And the only reason why Grant Thornton wanted to do anything with us anyway was hopefully that we'd go out and do something else bigger in the future. A round of £1 million or £2 million for Grant Thornton is nothing. There's no point in losing friends over £5,000 or £10,000 when you just raised 600. Just the thing right. Yep.
Oh, sorry, very much. I was just going to ask a follow-on question.
Go on.
If I may, sorry. Did you run into any problems with paying the 5%? Because not in terms between you and Grant Thornton, but with the new investors, because my company's raised a couple $1 million over the past few years, and the first $500,000 we raised, I had a similar deal with somebody, and I thought it was fine, straightforward, 5% commission only and all that. When we got the investor on board, I felt that, of course, I had to disclose that, in the documents. Yeah. He said, well, what's this? Why am I giving 5% of my money to some guy that just basically picked up the phone and, in his eyes, that's what you did. And so suddenly I had to go back, and I was in a very awkward position. I had to go back and kind of renegotiate with this guy that I had a straightforward deal with, because if I didn't, this money was at risk. He said, I'm not doing that. So suddenly, his flexibility became crucial to the deal and all that. And I've always been wary, I have done some other things since then, but I've always been wary about new money coming in to say about
we were open about it to begin with, so it was, we, in the meetings that we had with investors to begin with, we were straightforward about what the deal was. I think there is always a risk that happens. I think it's somewhat inflexible and unrealistic of the investor to expect that corporate finance will do this for free. But you do get people who are a bit like that sometimes, and they think they're in a position of strength and will use it in a way that's actually very awkward. You just have to decide yourself whether you pay them personally or do a deal for them. You need to be on board about it, but it's just some way to smooth it. Yeah.
If I've got your numbers right, it's got 200 to 300 per fit out per site, roughly doing, I guess, a year's lease and whatever else.
Yeah.
If Ogden's about to go bust, what's your barrier to entry for somebody else who's, with bricks or one of the chains to come in and say, hey, we can buy those machines and we can do that?
There's a question as to who's left. So there's actually no substantial high street multiple left that sells wine. It's quite hard to see a new entrant coming in, or if a new entrant did come in, our hope would be that they'd buy us rather than have to learn from scratch. Our real barriers to entry, we do have some exclusivity for the machines for large installations in certain areas of London, which comes along with each time we buy a new one, we get a larger exclusive area. The reality, the size of our sites is different from many other, because we need all this shelf, the wall space for the machines, we need bigger sites than what other people do, which obviously have higher rents, but pays itself back more quickly because of the extra margin. So it's, there's nothing massive. If someone came in with a check of 50 million quid, they could open a number of shops quite quickly. But then the question would be, could they manage the supply chain in order to actually get good wines? So there's no point in having this nice, fancy, busy technology stuff if you're then going to serve people wines that taste rubbish. And actually, it's taken us a long time to build up those relationships with the wine suppliers. And we have 1,500 different wines, and we got 300 suppliers. People could replicate it, but it would take time. And to do it on a very big scale very quickly probably wouldn't work very well. But
it takes a lot of breaking.
Sorry?
It takes a lot of breaking to buy a 10 or more.
Indeed. So yeah, just finishing off. So treat your employees well. So it's interesting. You know, we lost an employee earlier on, but she ended up being, you know, in effect providing us with capital. Trust your gut feel of data is really important, really hard to do. I always, you get a feel for it on both sides of the table. So sometimes you can feel it as a venture capitalist. You can feel when a deal's just not quite right. It's very hard to take that gut feeling and say, fine, we're not going to do it, or fine, we are going to do it. But equally on the other side, when you just begin to feel negotiations slip, there is a problem. It's, you know, you're not making it up. It's quite hard to actually to do that sometimes. In fact, just be lucky. So don't raise money in a big recession. Any questions?
Questions also for Jamie.
Yeah.
Sorry, well, I had the same question as the gentleman below, but just wanted to tell you that there is a shop called SIP, so you probably know already or not, with a similar concept.
Yeah, I mean, there have been, so there's more than one producer of machines like this. And since we opened in 06, there have been probably 3 other retailers who've done actually smaller installations, but in effect have kind of copied what we're doing. You know, so, you know, again, which comes down to, I suppose, some of those barriers to entry. I think it's more likely that those smaller competitors will be more threatening to us than a very large company coming in and doing the same thing. You know, the reality is it's up to us, as in any business, you're going to get people that copy what you've done or compete against you in a similar way. And it's up to us to make sure that we do, none of them do it in exactly the same way, so there's always differences. So it's up to us just to make sure we do better than them. So that's down to the quality of the wines and the quality of the service and
Would
sites
you
and
consider buying
communications
them on the
already.
next round?
Sorry?
Would you consider buying them on the next round?
If they've got the right, well, possibly. And, you know, I think a lot of people, particularly in wine retail, do it for the love of it rather than for the money, which is a problem in the business itself because it means that margins are generally quite low and unsustainable in the likes of places like Auckland. So there's a question as to whether it's indeed durable, but equally those people are unlikely to be a long-term threat because they probably don't want to run a 50, 100 store business. Yeah.
Is there any way to look at diversifying in terms of, it strikes me that the hours that you're busy would be after working weekends, and there's obviously a lot of time outside of those hours that they may not be as busy. Is there any sort of...
What we do at the minute, if I'm honest, is that we work through the day stocking the shelves and then they get cleared out at night.
Yeah.
So it kind of, it's not efficient in terms of use of the tills, so we don't get that kind of, you know, one business that I'm always really impressed with is Carluccio's, which manages to be busy from 9 a.m. to 9 p.m. all day long. And so, you know, maybe there are things that we could do in terms of bringing people in during the day. The reality is we then have to staff to it and it would change our business model quite a lot. You know, a substantial proportion of our sales are staff, and the majority of our costs are people. To change the model, we would need to we need the people that we've got at the minute just to keep wine on the shelves and get deliveries out. And we get customers through the day as well. It's just the bulk of it is weekends and evenings.
Any more questions for Jamie? Yeah, the back.
Okay, quick question. As you've been a VC yourself, you didn't raise the funds through VC, so it's kind of quite interesting. What was the reason for that?
Well, I worked in technology VC, so all of the investments that I made were quite a lot bigger than the one that we raised, and in a different industry. So I did know the VC that we spoke to. I knew them a little bit, that we got a term sheet from. But actually all the guys that I've worked with in the past were doing technology investments, you know, as many of the companies here are. It's making an investment in a young software company is completely different from investing in a retailer. And it's very unusual to find a fund that is able even to invest in both. So the combination is really not there. And the amount of money that we were raising is not that easy for institutional funds to invest. It's about the hardest size to get institutional funding from.
Any more for any more? Yes,
Sorry, just another one. I'm not sure whether you're already distributing through pubs and whether that was part of your business model.
We're looking at it at the minute, not so much pubs, but through restaurants. So as we've grown, we've expanded our supply side. So we're buying less from wholesalers in the UK, we're buying more directly from domains across Europe and a little bit further afield. That gives us a little bit of an opportunity to sell wines to restaurants and to people like that for wines that they wouldn't be able to buy from other people. The challenge is that restaurants don't pay bills very well. So it's purely about, you have compressed margin if you do wholesale anyway. You need all the operational side to be able to do deliveries and invoicing, all that kind of thing. But most importantly, you've got to get the cash. If you're on 20% margin as a wholesaler, which would be a reasonable margin for a wine wholesaler, pretty good margin. If one in 5 your bills doesn't get paid, you're actually losing money. And at the minute, it's probably more than 1 in 5 restaurants aren't paying their bills. So it's a difficult one. We're looking at it, but we're very nervous at the cash collection aspect of that.
Okay, all's done. Fun, going. Thank you very much indeed.